Hello, I Anand Jain from Hanumangarh, Rajasthan welcomes you to your favorite Shridevi classes YouTube channel where we inculcate interest and confidence in science, engineering and management subjects. Today in our playlist of project management and entrepreneurship, we'll understand two forms of government revenue sources, direct tax and indirect tax. We'll understand the two taxes with example and also make a valuable comparison between direct tax and indirect tax. So let's start. Study of direct tax and indirect tax. In our nation, the taxes of union government are categorized into two main types. One is direct tax like income tax or corporate tax, and the other is indirect tax like GST, goods and services tax, or custom or excise duties. Now both direct and indirect taxes are crucial in revenue generation for federal government and state government, and such tax collections are used to fund all public services, all government healthcare programs, education initiatives, program of employment generation, infrastructure development, social security, rural development, project of energy sector, infrastructure of rail, road or digital technology or port or airports, or it may be rural development, irrigation project, agriculture schemes. So for all government projects, schemes and infrastructure developments, we need revenue, and those revenue come from two way. One is direct tax and the second is indirect tax. Personal and corporate income tax are two direct tax revenue source of government, and gross collection of those income tax is 19.7 lakh crore, and after refund the net collection of direct tax comes to be 16.6 lakh crores, whereas the annual GST collection, which is 18 lakh crore, is slightly less than gross direct tax collection, but definitely first time it is more than net direct tax collection. So now in Indian economy, indirect taxes by GST, custom duty or excise duty addition surpass the total direct tax collection. So in our nation, India, we have two type of tax. One is direct tax like income tax, and second is indirect tax like GST. And every year a financial bill is presented during union budget before the parliament, and this financial bill got proposals for both direct tax and indirect tax, and various amendments which are sought to be made in the area of direct tax and indirect tax, which are levied by the central government, are placed in that financial bill in front of parliament for debate, and after parliament sanction they become rule of the nation. The tax of which incidence and impact fall on the same person is known as direct tax. Income tax, corporate tax are example of direct tax. Direct tax are levied and recovered directly by the government from the SSC, who ultimately bear such tax burden. Such direct tax, whether it is income tax, corporate tax, capital gain tax or securities transaction tax, they are typically based on the income or profit earned by the individual or corporate business houses. Direct taxes, whether they are corporate tax or income tax, are progressive in nature. That means the tax rates increases as the taxable amount, income, profit or wealth increases. For example, in income tax, in old tax regime, as one got taxable income more than 5 lakh, the percentage tax on taxable income increases from 5% to 20%. Similarly, in new tax regime, up to 2,50,000 there is no tax, but when income increases beyond 2,50,000 there is 5% tax, and the same rate exists up to 5 lakh, and beyond 5 lakh up to 7,50,000 it is 10%, and above 7,50,000 up to 10 lakhs it is 15%, and above 10 lakh up to 12,50,000 it is 20%, and from 12 lakh 50,000 1 rupee to 15 lakh, it is 25%, and above 15 lakh, it is 30%. So, as taxable amount, income, profit, or wealth increases, the progressive direct tax rate also increases. And example of direct tax include corporate tax on business house, income tax on individuals, capital gain tax, or security transaction gains. Earlier, wealth tax was also one direct tax, but now it is abolished in our nation. Indirect tax is other type of tax which incidence on one and impact fall on other one. So there are two different person on which incidence and impact of tax occurs, and such tax are called as indirect tax. Now indirect tax are ultimately paid by consumers through some intermediate assessee from whom customer purchase goods or services. Usually indirect taxes are collected by intermediary assessee such as retailer, wholesaler, or manufacturer, and these intermediary pass the tax burden on consumer which purchased and paid price for goods and services. Example of indirect tax includes goods and services tax, GST, custom duty, excise duty, value added tax, VAT, sales tax. Both direct tax and indirect tax are significant in government revenue systems and got almost equal participation in total revenue collection. Let's make a comparison of direct tax and indirect tax. Direct tax, incidence and impact of direct tax fall on the same person, so direct tax is paid and felt by the same person, whereas incidence and impact of indirect tax fall on two different person. It is assessed and paid by one, and impact is felt by ultimate consumer. So levy and impact of indirect tax are on two different person. Indirect tax, assessee himself bears such tax, and so direct tax directly pinch the taxpayer, whereas indirect tax are recovered from assessees, but assessee pass such tax burden ultimately to another person, and which is ultimately passed to final consumer, so it doesn't pinch the taxpayer or assessee. Direct tax is levied on income amount. For individual it is income tax, and for business houses it is corporate tax, whereas indirect tax is levied on goods and services which are in business transactions. And example of indirect tax are goods and service tax, GST, custom duty, excise duty, and such taxes ultimately affect consumer price, and excessive amount of such tax leads to inflation and have wider base. Direct tax got a progressive pattern, and higher tax is levied on a person whose income or earning is higher, and lesser amount of tax is levied on people having lower incomes, whereas indirect tax like GST will be bear equally by all person irrespective of their financial ability for the goods and services consumed by them. The direct tax is levied and collected by Central Board of Direct Tax. So CBDT is responsible for direct tax like income tax and corporate tax, whereas indirect tax like GST and custom and excise duty are levied and collected by Central Board of Indirect Taxes and Custom, that is CBIC. We hope this small beautiful learning video has explained both role of direct tax and indirect tax in revenue system of Union Government of India, and we have also made good comparison of direct tax and indirect tax. Our other learning video of the same playlist are equally useful. You can use them in your study, or you can also share them to your friends for their reference. Happy learning. Have nice time. Keep watching. Thank you very much.